Hello, everyone. Michelangelo Mortellero with Mortellero Law. I am very pleased to be joined today by my business partner and co-founder in Fortress Asset Protection, Jason Sampson, as well as Don Gage, who is a independent auditor and kind of team leader. That may not make a lot of sense to you guys now, but as we get through this presentation, I think it will start to make a lot more sense. So I was first introduced to Don through a mutual acquaintance, a financial advisor, a couple of months ago, and just fascinated by the things that he was telling me are resources and things that he was telling me are possible for business owners that I had never heard of. And whenever I hear of something that I've never heard of, it kind of gets me jazzed up, and I like to share the information with other business owners because I think it really can be of value. So with that, kind of a background on myself and our firm, for those of you that haven't joined us on these chats before, my name is Michelangelo Mortellero, again with Mortellero Law and co-founder of Fortress Asset Protection. My firm is based on estate planning, asset protection, as well as veterans benefits and Medicaid benefits. We work very closely with business owners in order to protect their assets. I'll let Jason Sampson with Venerable Law kind of explain his piece in the business law side. And then both of us are dedicated to finding resources and sharing information to other business owners, entrepreneurs, real estate investors on things to make their life better, safer, more profitable. And so that's kind of the vein of where we're going today. So Jason Sampson, Venerable Law in South Tampa, take it away. Tell us a little bit about your practice, and then I'll let you lead the Q&A with Don today.
Hello, everybody. At the end of the day, what we do here at Venerable Law is we support business owners. So my name is Jason Sampson. I am the founder of Venerable Law here in Tampa and co-founder with my good friend here, Michelangelo Mortellero, and Fortress Asset Protection. It's good to know the name of your own company. We started the idea of this series to make sure that who we had access to as lawyers and as practitioners in this area for decades plus. We find all sorts of information of referral partners and extra interesting resources that maybe the average public doesn't know about, and certainly Don Gage falls into that category. As we sat at an initial meeting with him and the nice lady that introduced us all, I think Michelangelo and I were both quite amazed at even the concept. And having been out here for several decades in practice and working with business owners and estate planning, you tend to think that you've heard just about everything that could be out there as a peripheral or ancillary service to our clients. And this is certainly a new one that we're not aware of and was not really on our radar at all. Don being a great resource for that, we wanted to make sure to get him in front of as many people as possible and make sure that more people, especially the ones that we work with and are interested in what we do, have access to what he can offer for the commercial property owner. So at the end of the day, we'll start off, we'll give Don an intro here, and it's going to be a very light question and answer format, and we'll let Don take the lead in a minute. As we advertise in this webinar, this is all about commercial property owners and maximizing your cash flow with little known strategies. And like I said, I think Don here has got one of the most little known to us anyways, and I'm sure it's much more widely known in his industry. So Mr. Don, if you'll take it away with an intro of what you do and the name of your business, and we'll go from there.
Thank you, Jason. Thank you, Michelangelo. What I do is basically I'm a highly specialized auditor, if you will, a team leader of specialized auditors in various services. And for the tagline that we had today, it was basically how to help commercial property owners. And so there are basically 3 or 4 services that fall into that category, although we provide many more. For commercial property owners, about 90% of them are not recouping the cost of their property in a approved method and a method approved by the Journal of Accountancy. And so these are things that most people are not aware of, but does increase their cash flow. So that's what we do in terms of property owners. But at the same time, if a property owner is going to move his property from one location to another, meaning a 1031 exchange, not to get too deep in the weeds here, but there's ways for them to extract cash before they actually do that 1031 exchange. So commercial property owners can increase their cash flow by these techniques, and they can also increase their tax credits. So if I may just go into the three areas that we do to increase their cash flow and profits. Basically, like to let everybody, our viewers, know that we work on a contingency basis. So if we can find benefits for them, then we receive some sort of compensation, and if we can't, then there's nothing that they owe us. In the form of property owners, there's an accelerated benefit to recoup their costs. For example, carpeting does not last 39 years. So that's going to actually be worn out in 5-6 years, and you're going to have to replace it. So basically what happens, this is an example of other components in a business or in a building, and that's why commercial property folks can recoup their costs. The IRS put an entirely deep package out that the kind of specialized engineering benefits that they like to see when the accountant prepares these papers. Jason, did you have a question?
I did. So just Michelangelo and I have had the benefit of hearing you and working with you and understanding this a little bit better. So just kind of take it through our normal business owner clients, right? So especially here at Venerable, that's what we specialize with. That's who we work with, and also over at Fortress. A business owner owns a commercial property. They come to see Growth Management Group, and you're over there with those folks. What does that engagement look like? What is that initial process? How can you help them, and what's the benefit to them of working with you guys?
The benefit to them is basically increased cash flow and profits. The actual process is to have a short conversation like we're having right now, Jason, and short conversation like we're having right now. I ask a few questions, and based upon our proprietary software, I can come up with a estimate of benefits based on our previous audits that's updated in real time. So then they can, at that point in time, see the numerical benefit that they might receive, and they would also know whatever sharing arrangement there is, because the sharing arrangement differs by the amount of time and effort we put into a particular service. So at that point in time, that's what we do. We ask them a question about, do you own property? Have you done renovations? Do you do merchant processing? How many folks do you hire per year? Just in that area, there's 3 tax credits which are appropriate for businesses. So we don't get into the weeds in the first phone call. It's just a high level, is this of interest to you? And then we go into much more depth.
And that engagement, when you talk about sharing arrangement, you're talking about the way you're actually paid, right? So if you can just walk through that. And I understand what you said, and in full disclosure, you've been, very forthright, and there's nothing hidden here. There's no hidden secrets. You're not going to get hit with an extra fee. Just to explain to us how that works generally.
Well, Jason, what we do, I have an example here, if you'd like, if you'd let me share that. This is a live example of a restaurant that I had a conversation with about 2 or 3 weeks ago. So in having a general conversation with them, then the slide I can show actually shows the amount of benefits we had for the different categories. And then when a business owner sees that, right after that, we go into each one of the various components and say, this is what the sharing arrangement is. And if that makes sense to you and you would like us to get that benefit for you, then we will go do the work, and what the upfront sharing arrangement is if we find you the money. Sometimes as we get into the details, it is not as much as what we might see on the screen, but it's still the same percentage, and sometimes we don't find anything because of the circumstances of the client.
But at the end of the day, it was kind of a bad question, Don. So that's my fault, not yours. So when we say sharing arrangement, we know essentially these people are not paying out of pocket up front for your services. So it's
That is
essentially
correct.
a
That is
percentage
correct.
of, and that percentage, depending on the type of service and, like you said, the length of engagement and what's involved, is disclosed to them. And then it's, if we're talking about $1,000 in savings, they know the potential exposure to what they would have to pay you on the back end. But all of that would be set forth before they, went forward and said, go forward with
Absolutely,
all of this.
absolutely yes.
So,
And
and that was really the light bulb moment for us, right? So, I mean, I know everybody gets busy with the day to day, but if a short conversation with Don can make you some money that you're not otherwise remotely even, acknowledging or having any sort of understanding that you could tap into, I think it's a win-win for everybody, right? So,
uh,
at the end of the day, as far as we understand it, you're always going to end up, somewhere in the positive side. And to Don's point, maybe they do the evaluation, and there's not necessarily, a huge savings there, but at least you've laid out the conversation and you've laid out the game plan of, now we know the things to look at. Come here in the future, there may be something. So, but again, tapping into something that most commercial property owners are not even remotely aware of. And, this is no slight towards CPAs or anything like that. We work with them, we love them. And again, it's not a negative to them, but the average CPA, or, most CPAs would not even know to ever delve into this. And this is, as a business owner myself and working with business owners all the time, and especially, those with commercial properties, that's mostly where people are relying upon, for that type of advice, is to the CPA. So someone like Don comes in and is hitting an area that, otherwise is untapped by most folks, and can, like he said, there could potentially be hundreds to, many thousands of dollars in savings, back in your pocket that you would not otherwise be tapping into. Is that all fair to say, Don?
yes, it is, Jason. That's the whole purpose of a short conversation, to survey the situation or the case for that business owner. There are some business owners that don't own property, but they do hire employees. Restaurants, for example, might hire 40, 50 people a year, and they can take advantage of a program that's 4 decades old. Or if they retained people, then up to $33,000 a person for a retained individual due to this COVID situation. And that's something new. So that's what we do. If we can find them a benefit, then we share in it. But they are getting the lion's share of the process. And so that's what's keeping a lot of folks alive right now. Our queue right now on this situation, the backlog, so to speak, is up to 4 or 5 weeks, because of the magnitude of the money that the government authorized.
Well, and that's an important point. Those are important points that you bring up too, Don. Just to be clear, and I think I've heard you correctly, and I think we focused the title of this webinar today about commercial property owners, but you also have benefits separate and independent of owning property. You have just for the business owner as well, like you just categorized, right?
Yes, that is correct. Our services increase cash flow and increase profits. That's the bottom line, and we use specialized services that have been around for quite some time.
And how often would you say it's in the customer, your client's best interest to undergo this type of review? Is this a one and done type engagement, or is this you know, we're doing it every few years, or how does that work for you guys?
Jason, that's a great question, because our
Thank you.
services our services go into two separate areas. One is a one and done, okay, because if they've had a cost remediation study done in the past on that building, you don't need to redo it, because you're breaking the building into its component parts. But from a business angle, they're hiring people all of the time. They're doing processing all of the time. They're getting revenue. So those are expenses that can be reduced. And I can share statistics, but the bottom line here is that those are ongoing benefits over the course of time. And so that's what increases cash flow and profits over the longer period of time. So some of it is one and done, some of it is on a regular basis. And the beauty of this sort of thing is the rules keep changing, and that's why we have subject matter experts on that.
Don, if you don't mind, take us through that slide, because I know I had the opportunity to look at it. I think that would be great for business owners, whether they're real property or otherwise, to kind of take a look at a real world example and some real world numbers. And while you're pulling that up and sharing your screen, Jason and I are big fans of educating our clients and just providing resources. And if those clients can figure out through education what works for them and what opportunities are there on a contingent basis, I think that's really a win-win, because at minimum, you're going to walk away with an education that you didn't have. You can share it with other business owners. Even if it didn't work for you, there's a possibility it might work for someone else. So you can become a great resource
Exactly.
for other business owners that you may own. And at the same time, if someone came to me and said, look, here's 100 grand that you didn't know about, and I want X% to put this in your pocket, I don't think I would be complaining too much about taking the lion's share of, as they say, 10% of something's better than 100% of nothing. So I
Yes.
like the way you do business, and I appreciate that our clients and the people who are seeing this aren't necessarily going to need to write you a check for the initial analysis to even figure out if there's something to be had, and then take a chance on that being kind of wasted money. The only way that money transacts hands is if you are successful in what you tell them you can do. So with that, I'll turn it over to your slide here.
All right. Do you see a black slide there that says,
We do.
congratulations, we've identified 5 areas?
Yes, sir. It's up.
Okay. So this is a slide of a general conversation I had with a business owner about a couple of weeks ago. And in this particular case, he was hiring quite a few people a year. It's a restaurant case. So when it's a service we provide that when he hires a person, they know what the level of the tax credit is before they hire him. So that ranges from 9,600 down to zero, but many times it's around $2,400. Waste and recycling, credit card processing, there's overcharges in that particular. The average overcharge is about 20%. Some savings on property tax estimates, which we would receive a fee for the first year, but then that ongoing lower level would be going right to the client. And then the one and done would be the commercial property owner's incentive, where basically we would provide engineering studies according to the IRS guidelines. We work with the accountant to make sure all the proper forms are filed. That can increase his cash flow immediately. And we can also go backwards in time to recoup money that's already been spent, or shall we, recoup money that's already been spent to the IRS. So that's what this slide basically represents. And naturally, the numbers will go up and down depending on the case of the particular client. There are staffing companies we work with. There's in benefits for software companies. We've been doing it for about 15 years, and we work with about 17 different verticals. So in this particular case, this is what we found for this business owner. And as the numbers you can see, he decided he would like to go further forward to see how it might pan out for his particular benefit. And again, there's no cost to him unless we find him money. And then when we find him money, he knows what the share of it will be. And that just to give everybody an upfront, transparent view, the way the sharing arrangement works is 5% on the low end, all the way up to about 45, 50%, depending on the service and the amount of time and effort we have to put into it. But the bottom line benefit is the client receives, or the business owner receives, a minimum of 50%, all the way up to 95% of what we find.
And this example of $285,000, is this, I want to say, typical, or is this the upper end of the range that you see, or the lower end?
Well, I chose that because it was available on my computer quickly for this morning. The range probably goes down to about 3,000-4,000 that I have found. And for personally, in my particular business, all the way up to 853,000.
Okay, so
it all depends on the business, the vertical, and their particular situation. Others that I know have gotten higher numbers, but the bottom line here is it's case specific.
Sure.
And so that's what it is. So I can't tell you if it's average or not.
If someone decides to work with you, is this typically an ongoing relationship where every so many years you go back and kind of reevaluate their situation, or is it annual, or is it really just a one and done engagement on average?
Well, it's a combination of both. The bottom line benefit here for commercial property owners incentive, that's a one and done. We
Okay.
go in, we do the engineering study, work with the accountant, they send in the forms, and that's a nice, neat package. But when you get into the property tax, that would be more of a one and done. That might take a full year to get those benefits for him. Credit card processing is, well, basically that's a situation where that's ongoing. We're getting them benefits every single month because the processors keep changing the rules. And we have a proprietary method for evaluating the overcharges. And so that's an ongoing situation, which would require ongoing interaction. Waste and recycling would be the same, ongoing, and hiring incentives, that's much more of an ongoing, because as long as you're hiring people, you're going to be applying to the government for these various benefits that are available. So that would be on an ongoing basis. And the ongoing relationship is not a lot. Once you've established the relationship, you say, Charlie, how are things going? You know, it's been hiring any folks lately, et cetera, et cetera. So it's not a huge time involvement as you go forward. But it is a relationship situation, because as the business continues to grow, then there are other services that we have that we can also apply in this area.
So we've had this conversation for my own business, and we're actually in the process of getting your evaluation. I'm excited to get those results. A couple of things as a business owner that really stood out to me was the merchant processing. So we process well over $3 million a year in credit card transactions. And when you start looking at those numbers, and they say, oh, there's this little fee for the every transaction, and then there's a little percentage. Those seem small, and I guess in the whole aggregate of the revenue that you're processing, they are small percentages. But for us, we spend well over $100,000 a year just in processing fees. So in working with someone like yourself, if we have the ability to take any chunk off of that, and you got to think of, again, restaurant owners, they're processing probably way more than we are, because probably 90+% of their transactions are all credit cards. And there's other industries, online businesses that might be 100% credit card driven. So to be able to go in and recapture anything that goes straight to the bottom line that otherwise was getting written off as a cost of doing business. And so as the business owner thinking of recapturing 60 grand in 1 year back in my pocket, or being able to then redistribute it to my employees through benefits or through something else is a huge value. And then for those businesses that do have kind of a revolving door on hiring new employees, or maybe they're in a huge growth spurt and by necessity they're continuing to hire more employees, those could be big. One of the other things that you had talked about, since I'm in the middle of a renovation project on my commercial building, is, like you said, the carpet, the hinges, the doors, things that I guess traditional CPAs and accountants don't get granular. They just look at the cost of the building, the cost of the renovations. They drop it on a prefab depreciation schedule and call it a day. But to your point, carpet's a great idea. If your carpet lasts you 30 years, either no one's walking on it or it's pretty disgusting and you probably shouldn't have it anymore. So let's ask this question. Let's say you depreciate that carpet over 5 or 6 years, and in 5 years, I recarpet. Do we then put money back in the hopper and start depreciating the new carpet expense, or kind of once you do it, you just kind of let the future cost of maintenance go?
The answer to the question is, then at that point in time, when you redo, you can reinitiate a review, a cost remediation at that point in time.
Okay.
So there are certain thresholds, okay, that we have to follow, because if you're spending another 5,000 or 10,000 on a carpet renewal, that's not to really anybody's advantage to do something like that.
Right.
But if you're renovating and you're spending 200, 250,000 to redo parts of a building, absolutely yes, because much of that will then fit into that 5 and 7 year category to be able to recoup it so quickly, as opposed to a 39-year situation.
Awesome. Jason, anything else before we depart today?
No, not at all. I think this has been very helpful, and I think getting a little bit more granular maybe than we had intended, I think is very helpful. I think when you see the details broken out, and I know Michelangelo, you can speak from a voice of going through it yourself, so that's always very helpful as well. No, overall, I think everyone should give Don a call. Any business owner, any commercial property owner. I don't see the downside, quite honestly. And maybe if Don was a little bit difficult to deal with, which he certainly is not, it's a nice call either way. So at least you get a nice call with a nice gentleman, and potentially some really big savings for your business. So, and that's it's an eye opener for us, and I think an advantage for all of our business clients.
I agree. I agree. Don, any last words?
Yes, I'd like to add one thing. Camilla Harris, Vice President, said that about a third of the small business in this country had closed. And we did a fact check, and it was actually 37%. Wow. One of the things that we are able to do is, from a human being standpoint, the more businesses that we can keep operational, the more people we can keep employed, the more lives we can positively affect. And there are some small businesses that really need some assistance nowadays. And these are tools and techniques that in a short conversation, we can provide them the money that they need to keep the doors open. So I'd like to toss that out, because this is, again, they can use the money, and money solves a lot of problems. And it also helps a lot of people continue to live and work in a way that they would like to.
That's a great point. So for myself, we've been blessed that the pandemic hasn't really negatively affected our business. It's pivoted some of where we're getting our revenue from, but we've been really lucky that we haven't had to lay off anybody or close our doors or anything like that. But and so when I look at these savings, I'm looking at them as a business owner as cash flow and revenue. But I think you raise a very valid point that these benefits that you are able to obtain for business owners might make the difference of whether they survive this kind of dark winter and get out the other side with a business still operating. 37%, that's a big number. I'm going to go back after this call and kind of dig through that and try to pull some rationale as to why that's happened. But I think it's a very interesting number. It's a lot bigger number than I would have thought. So
it's a bigger number than I thought until it was fact checked.
Yeah. So here's the takeaways. I think if you are a business owner, small or large, if you have employees, if you own property, as Jason said, there's absolutely no downside to giving Don a call. And, if the answer is there's nothing to be had, like, all right,
That's it.
You're not in any worse position than you were before the call, but even if it's $5,000, $10,000 savings, for a lot of businesses, that is meaningful of keeping the doors open or being able to reinvest that money back in your business to make it better and stronger and be able to compete better in whatever your space is. Don, how can people reach you? We're going to put all of your contact information in the description in post-production, but website, phone number, if anybody's watching this and saying, like, I really want to talk to that guy, what's the best way to connect?
The best way to connect is send me an email or give me a phone call.
All right. And
email address is dhgage, that's David Henry George Apple George Edward @gmail.com. And the phone number is over here in Dunedin, Florida, 727-643-8005.
On that note, you just mentioned geographic location. Are there any limitations to your geographic spread? Is it only Florida? Is it nationwide? What does that look like?
We work in all 50 states. I think we've worked in just about every county. I don't want to say every county in the United States, but I'd say at least 90% plus of the counties here.
That's awesome. So we're not really restricted.
Yeah, so we're not restricted at all, because a lot of the rules that we're following are federal rules and then state mandated rules. So no geographic restriction.
That's awesome. Well, listen, anybody watching this, I hope you got something out of this today. And even if it was enough to pique your curiosity, which I couldn't imagine being a business owner and not having your curiosity piqued on what is this all about. And if there's money laying out there, I'd rather not let it stay laying out there. So I appreciate your time today, Don, Jason, as always. great getting together and using this opportunity to educate business owners and to provide resources. So I hope you guys have a great day, and we will see you next time. Take care.
Thank you.